Okay, so last week we had a few trades last week. I think one it was I can't remember what trade was, but it was Euro something anyway, and that trade turned out to be good. I think it was Euro Cat. Let me load it back up. I think it was Euro Cat. Yeah, Euro Cat. So last week's trade was successful. Was literally the only trade we're looking at anyway. And I remember I told you guys to be very, very, very careful in regards to the trade anyway. And we had 100% date. And one thing that I've noticed throughout this year is 100% day seems to be canceling out quicker. Thank you very much, Mr. Sampson. 100% day seems to be canceling out much quicker this year because of there's so much uncertainties in regards to the pandemic and all of that stuff. And it's crazy, but nevertheless, you know, with this trade, with the EuroCAD trade we had last week, at least 108 pips or 106 pips was being taken off the table because it was like a Monday to Friday trade. Now, that being said, ideally that should be the last day, that last trade of the year. And the main reason I say this is because at the end of the year, market volatility is slightly lower. There's not much moves going on, and it could be a hassle, you know, trying to just get whatever you can get. Whatever you've made up from January up until November, mid-December should be able to sustain you for the rest of the year till the new year starts. But, you know, a lot of people still want to trade at the end of the year, but I don't recommend it. If you're going to trade anything at all, I recommend you trade gold. That being said, we'll look into gold just for a little while, see if we can find that move that we're waiting for. So, yeah, and it looks good. So they've taken out, commercials have taken out positions from the short side out of the 14th, and they've added positions. Oh, wow. I wasn't sharing my screen, apologies. So commercials have taken away positions from the short side and they've added positions to their long side, which is what we want to see because the gold, let me go check seasonality. The gold seasonality, we're expecting it to start the up move by the 23rd, right? So on the 23rd, we're expecting gold to rise. And that's mainly because of this. I'll show you. At the end of the year, most people, when they leave their trading desk, they just buy positions in gold anyway. A lot of people try to accumulate gold because it's the safe haven of assets, and you know, people do it to preserve whatever they've earned throughout the year and come back in January or February to take their profit. So from 23rd, we're expecting gold to rise, and the COT report is already showing us that gold is about to rise because they've added 3,000 in position while taking out 10K positions from their short side. And ultimately what we can see is that going up. And if we look at the probability of gold, gold has a, from the 28th, which is tomorrow, we should be seeing gold ideally going up, you know, based on probability. But if you check the seasonality, it doesn't really look like that. 28th is right. Oh well. Let me see. Yeah, so it's right here, which in regards to what's it called, 15 and 40 years to go up. So, but according to 5 years up until 2017, gold is going to start going up around 23rd. So, if we look at the gold, someone has their mic on. I'm just going to quickly mute everybody for a second. So if we look at the gold, we look at the gold chart right now. We want to see. Let's see. This is not changing. I think I have that on EA. Let me try to get. Let me get gold on here. Just give it a second, let it load. We'll check the gold chart and see what's happening in regards to the asset anyway, or what we should expect in regards to the asset. Okay, So what we can see is before time, gold is already moving. Gold started its up move by the 15th. Now, I don't think seasonality had something for that. Oh, actually it did. It did on the 6th. No. 15th on the daily chart, on the 5 years, just a little bump, but it was meant to fall anyway. And right here as well. But the ideal move should be somewhere around between the 20 and the 23rd. Right. So ideally, what we want to see gold do is gold is now looking at line for the year. And keep in mind, this move is going to be till January or even February. What we want to see is gold probably coming to around this region right here. Let me put a piece of support and resistance. Yeah. So what we want to see is gold coming to ideally here about the 20 EMA or somewhere within this green zone, and then taking a long position in gold going up, you know. And possibly, if all things goes good, we should probably take our profit here, which should give us at least about 1,258 pips on the buy on gold, or 13,000 pips from here, 1,300 pips from here, you know. So, but I would literally bank between here and here. So there's a gap of 100 pips between our entry. So entry could be between here at the 20 EMA, just around the support, this red zone, or up until I think somewhere around here, which is about 100 pips, 150 pips different, you know, between them. So what I would say in regards to this is 100 or 150 pips is nothing when you're aiming to take at least, you know, 1,000+ pips off the table, 1,200, 1,300 pips. That's still, if I'm not mistaken, about 500 times more, if not 600 times more than what your, you know, risk to reward is. So with positions like this, you can go with a small position at 0.01 if your account is very small, or if your account is, you know, like good enough, 0.1 should be okay. But if you have a lot of money in your account, one lot should be perfectly sufficient, because a one lot with this one should give you at least 10,000, 13,000 pounds or dollars. And with 0.1 should give you about $1,000+, and 0.01 should give you about $100 profit in January when it comes. But so far, gold already looks an alignment for the buy move that's about to happen. So if anything at all, that will be the main asset I'll be trading. Just before this webinar, though, I've already been on, you know, on a meeting or analysis spree with someone else, which we analyzed and also saw an opportunity in GBP USD and GBP JPY by going long. Also, what I want to point out is this, right? These two trades would happen between the 23rd and 27th. So that's even Christmas. I don't really think of that. But so what also I want to point out is, if you have, you know, if you have cash, a little bit of cash that you want to invest, and you don't want to trade every single time, right? There's ways that you can keep your money for a couple of years in the market, and you'll get a decent amount of return on investment over time, rather than trading every single time. And let me try to load. This is one of it, for example. This is one of the tests that I did. This is a 13 years test, by the way. It's 13 years. And a lot of people might not understand where you're seeing here, but it's an algorithm trading the market for me without me having to do anything. And the growth over time would be here. So the growth over time would be, let me see the results. And if we're keeping the lot size to 0.10 or 0.20, so if we started out with $1,000, for example, 1,000 pounds, you end up with 10,505 pounds in a space of 13 years. Now, to a lot of people, that might seem like, oh, that's not a lot of money, you know, it doesn't really look good. It's not a good investment. But if you really think about it, right, inflation in UK anyway, between that period has averaged 2.6%, 2.6, 2.7%, compared to what you're going to get off your return on investment, which is about 1,900 to 1,000% return on investment, 2-3%, you know, inflation rate has nothing on that. They're getting right there. So if you presume, for example, you have 10,000, in 13 years, you have 100,000. And if you started with 100,000, in 13 years, you have up to 1 million, you know. So, and if you started with 1 million, in 13 years, you have 10 million. So those are investments that you can do in the market without looking into it. And when I say investment, they're not really investment based on me trading the market every single time. They're based on probability. And what do I mean by probability? Is literally trading the market only on days that I have a higher chance of winning. So let's say, for example, I'm not going to trade all of this. I'm going to only trade when I have 79% chance of a win. I'm not going to trade anything else. I will trade 64%, 64 here, just following it. And over time, what you will notice is you're going to win some trades, you're going to lose some trades. But if you have good money management, you should ideally end up looking something like this. So that one takes away, the aspect of you having to analyze the market every now and again, and you can just trade based on the probability too. Okay, if I happen to have confused you, please state that in the comment. I know this is not like the conventional analysis that I do every weekend, and that's because of this will literally be the last webinar of the year till next year. So I want to do something a little bit different and make it spice it a little bit up for people that are starting up. Now, I might not sound as energetic because I've already done 2 hours meeting before this, but it's something that I think it will be very useful for you guys to have. So for those guys that don't have enough money to trade with, or that are looking to trade in the long term, you can simply just trade with probability tools on the highest probability days and still make money. For those guys that want to make a lot more money, you can use the seasonality tools, the COT, and then the probability tools, combine them together to make a higher return on investment as time goes on. Okay, so that's another thing. And also, I want to point out one more thing. We now have a new probability tool on the website, which is the S&P 500. I think someone requested this a while ago, and this is part of the assets that we are looking to diversify into in terms of stock markets. So the S&P 500 seasonality and probability tool is now available for 2022. So it's going to start on 2022. There's nothing for 2021. We're going to start off at 2022. So we have from January to December next year, the forecast of what's going to happen in the market for a whole year. So this might look crazy that how can I forecast what's going to happen till the end of the year, but it is what it is. I mean, that's what we try to do best, to see in terms of the long term what's going to happen in the market and be correct. And also to add up to that, there's the seasonality tool for also the S&P 500 right there. So for 2022 also, I think, if I'm not mistaken, it should say it's 2021 up until 2021 data, but it's for 2022. Yeah. So the move for S&P 500 for the next couple of years to come, for the next year, and maybe we won't use it for 2023 if we don't update it, if it's not necessary. So that's another one there for you guys to look into. Is there any asset anyone wants me to check in today that's of interest to them? Currently, right now, we're looking at gold and also GBP, JPY, GBP USD. So gold long from 20th to 23rd. I don't know what specific date it's going to be. You might have to look at the market for that, but the range, I'm presuming, is price coming somewhere between the 20 EMA on a daily to this zone right here, just to see if it's going to rate some of these guys away from the market. Okay, so that would be my one. GBP USD, USD CAD. Okay, I'll check GBP USD first. I think we already done the analysis right here for GBP USD, but I would show you why we picked long. So start off with GBP USD. So if we look at it, the COT for GBP for USD, and I think you pointed out CAD as well. I just want to load that up. Yeah. So for CAD, we can see the selling CAD. They're heavy on the sales of CAD, right? But on USD, there's literally no direction. Literally, the commercials have no direction on USD. So nullifying USD out of the equation. I'm just gonna reload that. Just gonna wait for that to load and see how that plays out. Why that's taking a while to load, you know. So then if we look at the seasonality for, okay, GBP is loaded. So on GBP, we can see them going long as well. So if we put here, GBP long, CAD, I think CAD short on the COT report, what we can then do is, the main reason I chose short is 9,000 in position coming to the, you know, to the sell side. These guys don't even have where to go. So which I don't really, you know, it's still okay for us to trade anyway, but there might not be enough volatility in the market. So if we check the GBP seasonality and also check the CAD seasonality, so I'm running both analysis in parallel right now. I'm not running them against each other. I'm just running like the GBP USD and then the, I think USD CAD. So with the GBP USD, what we can see right here on the 23rd, just similar day to gold, GBPs tend to be going up. Now, keep in mind, if 23rd GBP tends to be going up, it's because the pressure is now on USD itself. Because if gold goes up, USD ideally should go down. You know, so people take out the money from USD, invest it into gold because gold seems to be a much safer haven than GBP USD. So that's why we're seeing this correlation in which on the 23rd GBP tends to want to go up as well. You know, so if we know the GBP is going up on the 23rd, right, and we see the COT report of GBP going on the 23rd, what we can then look at is the probability of GBP on the 23rd. Well, let's also look at CAD. Yeah, we'll come to that in a second. If I go GBP, GPCA, oh damn, I clicked the wrong thing. Let me see if I can stop that. Too late. Apologies, by the way. I might be a bit sluggish. I've been working all day, so apologies. So GBP USD, with GBP USD, what we're gonna see now is at the end of the year. Let's see. A little more closer. So on the 23rd, what we can see is we have a 64% chance of a buy, 73%, and then 59% chance of a buy on GBP USD for the long side for the end of the year, in which case GBP USD for us is a buy on the 23rd. So we're not going to focus on it any, you know, on 20 on Monday, Tuesday, Wednesday, we're not going to touch it, but come Thursday, Friday, that's when we look to buy it. Thursday, Friday, Monday, we look to buy. So right now it's consolidating right here. And what we expect is probably market to do a little bit of consolidation between the 20 and that. And then come Thursday, price breaks away and try to go for the 50 EMA. And hence why we had the GBP USD long, you know, so it's long from the 27th, 23rd to 27th. Let me just put that right next to it. All right. So that's the GBP USD. Now the CAD, now because we know USD is most likely going to lose strength because gold is going up. What we want to do is also see if CAD is going to gain some momentum. Now, from the looks of this, CAD looks like it's going to gain some momentum from today going up. Now, I would not trade this because if this is going up, but the COT report is showing short, there's a conflict. And so far there is a conflict, I do not want to touch it. You understand? I will not want to touch this asset because of that conflict between both. Okay. So for that reason, CAD would not be an ideal target. So USD CAD will not be an ideal target because USD, first of all, doesn't have positions pointing in either long or short on the COT report, and CAD has a point in short, but on seasonality, it has a point in long. So GBP USD would be the ideal trade, which is GBP USD long 23rd to 27th. And then we also have gold long 20th, entries on 20th, between 23rd till Jan or Feb. So it's either, this trade is going to last either to January or February. So estimated pips should be about 1,200 pips. So it should be 1,200 pips plus. So I personally could just focus on my entire energy on just gold and just trade gold up when the opportunity arises, you know. Don't tighten your stop loss. Don't be too eager to run out of the market. Don't be too eager to run into the market and out of the market. Take your time with it and study it over time. Does anyone have any other trade they want me to look into? Okay. So if nobody else want me to look into any other trade. So I mean, what's happening now is we are now, you know, going to release new data for the website. The new data that will be released for the website will be more in the stock side of things. You know, we're going to look a little bit more into stock. I mean, stocks currently right now, I don't know if you guys trade Brent, but Brent is now on the website as well. In regards to let me actually go show you what Brent looks like. In regards to what Brent might be doing next year. So we have Brent oil right there. And to be quite frank, this is very accurate. It's a very accurate seasonality for Brent. I wasn't even expecting it to look that way, but it does really do a little a lot of work. I've been seeing it. You know, it's very accurate. So this is what Brent looks like. And there'll be more seasonality being put on the website over time. So really and truly, guys, on that note, this is really it that I have for you guys today. I don't really have that much, you know, to look into because it's the end of the year. I don't really want to stress and trade if it's not necessary. You want to spend this time with your family, enjoy what you've made throughout the year, and, you know, and have fun. So on that note, guys, I really do wish you guys a Merry Christmas in advance and a Happy New Year also in advance. We should be back on the 1st. Let me see when we should be back. Next year, we should be back by God's grace on the 9th. So there will be no webinar till the 9th of January. And that will be when we're back into the market analyzing what's to come. And also there should now be new asset classes on the website. And also I remember I was speaking about the probability there will be a membership solely for probability only. That should also get worked out between now and then, or maybe just a little bit more, but we'll figure that out as we go along and I'll update you guys. So on that note, guys, this is what we're looking to trade from the week that's coming. It's good to trade safe. Don't rush it. Take it slow and steady. Take it like a Christmas gift. Don't rush it and make that money and spend it with your family. Okay, guys. I really do appreciate you guys for turning up today. And I will catch you guys on the 9th of January 2022. Have a lovely holidays, guys, and God bless you all. Thank you for being part of the family. I really appreciate every single one of you. I love you guys, man. Take care of yourself. Thank you.